Hi everyone, this is Ian from BeAWinningTrader.com and this is my market analysis for the week commencing the 9th of October 2023. I'm going to start off with the pound yen and we're going to look at the bigger picture. This has been a very, shall we say, creative market in this past 7 days or 5 trading days. But we can talk about the past, but it's very important to analyze what the present is. So, um, last week we had what we call an inside weekly bar because this is a weekly chart of the pound yen. And let me just explain to you what that means. This bar here was inside this previous bar, and that was a bearish bar, quite simply because the close was closer to the low than it was to the high. And then, of course, we had the negativity on Monday, which we got to sell off, and of course, then what we call the flash crash on Tuesday. The market has since bounced. Been a difficult market to trade since the flash crash because the market has been trading inside a range. And let me just show you, if I put up a 4-hour chart, what I mean. And I'm just going to draw a horizontal line across here and across here. Now you can see from the Tuesday flash crash, and this was all around a rumor that the Bank of Japan was going to intervene to prop up the Japanese yen. It hasn't as yet done that officially. So it meant that this market has been trading all of this time, and during all of this period, and these bars, which represent 4-hour periods inside that. Yes, there were red bars indicating weakness. And then once it broke out of that, then the market has started to go green. Now, it's very, very, very important to me and to anybody trading price action correctly that a market breaks out of a particular range bar. Okay. And the reason being because we need direction, we need guidance. In other words, all of this on a 4-hour time frame and go down to 1 hour even, it becomes noise. Until it breaks out of this, it becomes noise. So again, going back to the weekly chart, where are we now? And you can see that we've got a very bullish weekly bar. Will I just remove this horizontal line? And the reason we've got a very bullish weekly bar is because it's closer to the high than it has to the low. And also, can I say that the last confirmed weekly bar higher low is way down here, way down here, and that there figure is at 158.26. So this market has an attempt here to make a support line quite significantly when in the midst of all the negativity from last week, Monday and Tuesday, and especially Tuesday, it stopped. All right, it didn't even get to those lows there, and those lows there at 176.31. It didn't get as far as that, and it has reversed. So for this week coming in, if I go to the daily chart, we've got a very bullish daily bar that closed on Friday. Yes, we've had a number of days that this market has been going down. So what I will be looking for this week coming in, and certainly for the beginning of the trading week, I will be looking for a retracement and to buy a retracement. So therefore, when I go onto the 1-hour chart, you can see that we're in blue mode. We have been for some time. I want to see a retracement on the blue bars, maybe perhaps in a 15-minute chart. Get a slightly deeper retracement, give me a higher confirmed price action or swing low, and we have our set of rules that determines when we've got a high confirmed to high or low in place. And once I get a higher low than this low down here, because none of this, even in round here, that is not a confirmed low, this market can still go quite a little bit lower and still give me a buy signal. I'm expecting a buy. I'm expecting this market now, after all the negativity, to come up, and you can see here those highs were at 186.76. So therefore, there's quite a lot of movement that this market could that has got no real hurdles to climb before it starts going up and testing those previous highs. So for me, pound yen to conclude is buy signal with a retracement first. Now, if we go on to look at the euro dollar, you've got also another bullish weekly bar in the euro dollar. Now, you can see that the euro dollar has been falling for quite a few weeks here. It's been 1, 2, 3, 4. This last number of weeks has been falling from 131 down to 104, or very close to 104. It went to a low of 104.48 this week just past. But again, we've got a bullish weekly bar. And also, if we take a look at the daily chart, you can see that we've got a bullish daily bar on Friday. In fact, it's on an outside vertical bar to the upside. To the upside, I mean it's closer to the high than it has to the low. But what is the overall trend? And I think we can very clearly say that it is a downtrend. But would you want to be selling the euro dollar at this minute in time? No, I would not. And my last confirmed lower high on the euro dollar is there's one there, and I have another one here. So I have just above those highs there. I just put that in. So there's plenty of movement on the euro dollar here at 105.84 to go up above, 107.70, 107.50, so 150, 60 pips before it is going to change trend, and then we'd need confirmation. So of course nothing will fall forever, and especially that's a bit disappointing when you're short because you want it to fall forever. If you're long again, you want it to rise and rally forever. Doesn't always happen, folk, and this is why we have to use a methodology and have a strict discipline and set of rules. So again, the euro dollar for me, I will be looking at the 4-hour chart in green mode. The 1-hour chart is in blue mode. Again, a little bit like the pound yen, I would be looking for a retracement, and I will be using that retracement providing I get a higher low than any previous low, and I will be looking for that to give me a buy signal. Certainly, as I say, for the beginning of the trading week. When I say for the beginning of the trading week, what I mean is that because of the volatility in the markets across the board, it's very, very hard now to say from any perspective, anybody that has got, I don't mean to say any, but any trading sense, excuse the pun or excuse, I hope I'm not insulting anybody. Any trading sense, you have to very much trade what we see. This is what I see for the beginning of the trading week. And of course, nothing more would I like than follow through. It's so important. If I go on to the pound dollar, otherwise known as cable, exactly the same, folk. We're getting very similar patterns here across the board on sterling market, certainly with a pound versus the Japanese yen and a pound versus the dollar, because we've got again a very bullish weekly bar to the upside. Again, we've broken previous support, so we're definitely not in a bigger picture uptrend, but we've got plenty of opportunity from which this market can certainly go up a little bit to give us, from an intraday or an interweek perspective, points, pips, money on the table, and we need to take advantage of that. Again, a bullish weekly bar, a very bullish outside vertical bar to the upside. Again, there was a little bit of resistance there, not a confirmed lower high in here, there, may I add, but still, nonetheless, that is a resistance level up there at 122.71. So we've haven't much to hit that there, but I can see this market certainly rallying. And again, we're going up to these levels here. That is the last lower high on a daily chart on the pound yen, or the pound dollar rather, cable. And therefore, if I just extend that line out and try and keep it as straight as I possibly can, there we can see that market's at 127.53. We're at 122.37. So we've got plenty of price movement to the upside before we're starting to change anything at all in relation to trend changes, etc. And again, I'm going by price action trend changes, okay, with a defined set of rules. Now, if we go on then to look at the dollar yen, which is another great market again, I can see this market, as I've said in my last analysis, which was last weekend, that this market is certainly heading for the 151.94 to test this level up here. And I think that is what it is going to do. So I do. And again, if I just put this here on, let you know what I mean. Up here is the key levels on the dollar yen. Again, another bullish weekly bar. We've got a bullish daily bar here, trading for 2 days inside this bullish daily bar. So this was the daily bar of Wednesday. And again, it closed closer to the high than the low. So therefore, it is a bullish bar, everybody. It's an outside vertical bar to the upside. The greatest probability when analysing a single vertical bar that you can have. And again, the high of that bar there is a high of 150.16. So therefore, that there is still in place. The only time that is negated, by the way, is if this low is broken before that high is taken out to the upside. Okay, that is the only time that that is negated. And again, I have to honestly say that I would be looking for retracements. We've got blue bars on the 1 hour chart. We've got blue bars on a 60-minute chart. And again, I would be looking for confirmed vertical bar trading pattern higher lows or swing highs, swing higher lows, I should say. Which again, we have got our set of rules that determines that when they're in place. And we know the good thing about having a set of rules when you're determining swing highs and lows is that we know exactly when they're in place, not after the event. We can look after the event when I can tell you down there we had a confirmed higher low that was confirmed by this bar here. This bar happened to confirm that, not those two bars. This bar here confirmed that to be a confirmed higher low. And again in here, we had another one which was confirmed up here that there was a further higher low. So we know exactly at the time. So we do. That there is not a confirmed low yet, folk. That is not a confirmed low based on my rule set. But still, that is a low there that has got support, and it is a support low that we have to certainly take into consideration. So that is where we're keeping an eye on. But really and truly, our last confirmed low was way down underneath 148.84, probably about one. Well, I'll just tell you exactly. It's a low there of 148. Our last confirmed low in this market is 148.83. Is it 83? It is 83, yes. So we know that there's plenty of room in this market. Certainly has a little bit to go before it changes trend on a 15-minute chart. Again, higher low, blue bars, looking to be long the dollar yen. We'll go on to look at gold pretty quickly. We again this is a weekly bar of gold. We've got a close on gold. Gold has been pretty weak, folk. We've a close on gold that is closer to the high than it is to the low. But also always remember from a technical analysis perspective to always look over to the left of your chart. And what do I see when I look over to the left of my chart here? I see support in and around those lows that gold has just made. There's the very low there, but these two lows here just on either side of that lowest low is very similar in price. That low there was a low of 180898, a low of 10938, and just on the week gone past we made a low of 181043. So you can see now that there's a lot of support around the 1808, 1810 level on gold, and we've closed at 1831. So that there then gives me an objective from which I know that if it breaks that then I would need to be certainly no longer be considering long positions. But because we've got a single bullish weekly bar on gold, as you can see, because the close is closer to the high, and because we've got the support, that means that, and I will certainly be looking for longs on gold. Yes, the overall big picture, lower highs, lower lows, we're in a downtrend, but folk, we have got great objectives up here. 1885. That their support should become resistance. That would still keep gold in a downtrend, but it would give me and you certainly objectives and opportunities from which to go long, from which to lock in some points, from which to lock in some money, and be saying to the gold market, thank you very much, Mr. Gold Market. I was able to analyse and read you correctly, and I was able to take some money out of the market movement that you made. And again, on the daily chart here, we've got an outside vertical bar to the upside. So there's a lot going for gold. And the key thing, always remember, everybody, we're looking for strategic points and places from which to place stop orders. We want to have stops in the market that are strategic places that if we are stopped out, if we are, as much as we may dislike being stopped out, of course we do, but if we are stopped out, that then we have to be content that our analysis, our price action objectives, our probabilities at that particular time are not going according to where they should have went. We have to accept that. But if you've got stops in the market that are at non-strategic places, everybody, then you're going to be like the little rowing boat out in the middle of the ocean when a big ocean or when a bigger ship or a bigger boat comes along, is going to wave you up and down and eventually capsize you, right? We don't want that. We want to be that little boat that is sitting close to the marina, to the jetty, to wherever, to the coast, that we're not going to get knocked off and tossed upside down. We want to be strategically placed in the marketplace, and that is what it's all about. And as I've said, key area. A key area. We know that we can try and buy gold, providing we get an intraday higher low, but we know that if it does break that 1808 level, then we no longer want to be long gold. Okay, so let me take a look at the DAX. Go on to the DAX market here again. The indices here, the major markets such as the DAX, the Dow, the FTSE, S&P, even Nasdaq, folk, they are volatile. You know, they're giving us bullish signals one day, bearish the next. But again, trading what we see, we've got a bullish weekly bar, and when you look at the larger pictures, you are able to get a better picture. You know, with a larger picture, time frame charts, I should say, you're able to generally get a better feel for where the market, especially in volatile times. Okay, and then it lets you know, just as I've said in the gold market, it lets you know where strategically your stop should be and at what particular points the market should not go above or below. And if it goes above or below those levels, then those buy or sell signals that you have are then certainly places that you do not want to be in. Okay, so again, I have a bullish DAX weekly bar here, and if we click on the daily chart, you can see we've got a very bullish daily bar. So again, on the early part of the trading week with the DAX here, folk, I will be looking to go long. You can see here after the news come out, yes, we had the employment news, big news on Friday at 1:30 p.m. UK time, 8:30 a.m. Eastern Standard. Non-farm, and certainly, you know, we had this particular movement. The quite important aspect of all of this for me was that we had blue bars prior to that. Blue bars are indicating that we've got a greater number of buying pressures within this particular market on the 1 hour time frame that we have selling pressures, and even though the market dipped down, those buying pressures were still greater than any selling pressures. We're quite to this weakness, so this is indicating to me, yes. Yes. Down here, we've got a higher confirmed low, so 15,034 in the DAX. We're 15,279. So the last confirmed higher low on a 1 hour chart is down just above the 15,000 level, some 250 or 60 pips or points away from where the market closed on Friday. And again, if we go to the daily chart, as I've said to you, we're very bullish here. So again, I'll be looking for a retracement. I'm not going to, I very much want a retracement. I want a higher confirmed low on an intraday basis on Monday morning. I'm looking for a higher low on the DAX. And with that higher low, I'm looking then for a spot from which I can place my stop and go with the trade. Because all we can do as traders is control our risk. We cannot determine whether the market is going to be successful for us or that particular trade is going to be unsuccessful until after the event. But there's one thing that we can do, and that is control our risk. So controlling our initial risk is key. Okay, if we go on to the S&P 500, again, folk, we had a bullish weekly bar last week. And it broke the low because the Dow, the US 30, the Dow industrial average was the opposite. It was indicating weakness. But we've got a bullish weekly bar here, so we have on the S&P, and indeed on the Dow weekly bar, we're now in tandem because we've also got a bullish weekly bar on the US 30. So we've got the S&P 500 weekly bullish, we've got the US 30, the Dow industrial average bullish, so we have. And that there is great because we've two major markets in the US now in tandem. So again, exactly the same. Yes, we had a bullish price action day, so we had on Friday, and again exactly what I will be doing. I will be looking to now get a retracement. We've got blue bars, we've got neutrality in here because this market was going totally sideways, as you can see here. Look, if we draw a horizontal line across this, a horizontal line across here, you can see very clearly that what this market was doing. It was very much range bound. And then, of course, when the news came out, it broke out through that there. It probably dispersed of any stops and sellers in here, if you want to look at it in that particular way. I'm not particularly over enamored to look at it like that and saying, oh, stops have been hit or stops have been run. They probably have, folks. Don't get me wrong, I'm not dismissing that. But it's very much from a trader's perspective that we trade what we see based on our set of rules. And if we are stopped out, we're stopped out. There was no real signals in here. There certainly is something now setting up. And all I want is a retracement into Friday's range. Give me a higher intraday low, and for that market then to hopefully start heading back up north again. That is what I am hoping for. That is what I see based on probabilities. And again, as I've said, the US Dow, the industrial average is very much the same. A very bullish bar. In fact, it's an outside vertical bar to the upside. So it is with a close closer to the high and the low. So therefore, that means that we've got a greater probability. That's all we can work on. Probabilities. We've got a greater probability that this high of Friday is going to be broken before that low. And that high of Friday, by the way, is a high of 33,563. So that would be very, very good. Now, if I go on to just to look at the FTSE, and again, the FTSE, this was a stronger market, folk. It has certainly broken. It had been trading for 2 weeks inside this bullish weekly bar low at 74. That low was at 74.75 in there, and it broke that. It made a low of 73.85. It went 90 points lower. It's bounced and it's closed at 75.25. Again, it's closer to the high than it has to the low. But it's not looking as bullish probably. But again, if you take a look at the Friday's price action, it is a very bullish daily bar. And certainly, if you're analysing that single bar, that close is closer to the high than it is to the low. Just not as bullish, as I've said, as the US markets, but nonetheless, now maybe it's going to all the major markets get in sync with each other, which would certainly, from a trader's perspective, would make my life a little bit easier, and no doubt your own life a little bit easier. When we have got conflicts of one major market indicating one thing and the other one indicating something different, you have to trade the particular market that you're looking at or you're trading. But certainly, it can be confusing. Okay, so at least we've eliminated that confusion at the minute. I would say the FTSE maybe might have a retracement before it decides to move on. And again, we've got blue bars and 15-minute charts. So we've got blue bars on the 1 hour chart, and I would be looking for a retracement. In other words, a market to come down, do this here, and then head back up north again. Give me a lovely higher low signal, confirmed low with a blue price bar, and take it. And again, strategic places from which to place your stop would be underneath those higher lows, just like in there. Okay, simply that. And the last market I'm going to look at again is going to be the oil market. This is like crude oil. Brent crude is very similar in pattern. Again, we've come, the weekly, we've had a bearish weekly bar last week, of which it was indicating we should take this low out before the high. That's exactly what it has done, folk. And it has went down and closed very close to the lows at 82.98. And you can see here on the daily charts, we've had 1, 2, 3. With one day here, it tried to buck the trend, and it didn't do that because it immediately took that low out instead of taking the high out. And when it does that, that's like flipping a coin on its head. Remember that if you happen to be long in a market, takes the low out when it should take a high out, you have to be out of that market immediately. We want little pain as traders, and it just shows you the power of having that knowledge, because once it broke that low, you knew that you did not want to be looking at long positions. You want to be taking short positions in that market. So we're going to fall from that low there, which was at 88, down to a low at 81. 81.70. So by golly gracious, what a movement. Now, again, here's what's key, folks. That is our last confirmed. That is our last confirmed higher low at 77.82. So this market still is very much an uptrend unless it's on a daily perspective, unless it starts breaking these lows. And again, the weekly chart, as you can see, is away down here. So we started this all off just like with a double bottom, and the power again of the basics of price action, knowing this, and we know this market has to move quite considerably down to those lows before it's starting to change trend. But certainly initially for the US for the light crude oil market, I will be looking for any retracements. So I will be probably looking to sell that market unless, and I'm going to put a little adage in here, unless that market immediately goes down and breaks that low of 81.70. It's at 82.98. So if it breaks that 81.70 at the minute to the downside, then and starts rallying, then I will have changed my outlook. But if it rallies within this very bearish weekly bar without taking that low of 81.70 out, I will then only be looking for intraday or intra-week short signals on the light crude oil market until such times as it does break that low at 81.70. Again, just like the pound yen last week, folk, when it's trading inside a very bullish, a very bearish bar, therefore you're in no man's land. You're in no man's land and you have to go back to the objectives. And quite simply, if we go back to the objectives of the pound yen and you go to a 4-hour chart and you see there that that close was closer to the high than it was to the low, what was that telling us? That we should, technically speaking, take that high out before we take the low out. That is exactly what we done. That is all about knowledge, and knowledge is key. So if you would like to learn more how my methodology works, the rules set to my price action methodology, and a little bit more about how our software trading tool works, our STB Trend Trader tool that paints the price bars red for a sign of weakness, blue for a sign of strength, or green for neutrality. Then go to beawinningtrader.com, put //masterclass, and in there, if you sign up, you'll be able to watch a 35 minute condensed webinar from which I go over everything for you. Now, again, look in the description below this video, and you will be able to join my Discord channel. I've got a 14-day free trial, so you can try it out for 14 days. You will see the signals that I'm giving out. I'm mainly giving signals in the pound yen. I will be developing further markets to start posting in the very near future. And again, we're up, well over 500, 550 points over the last 4 or 5 weeks trading that particular market. Is every trade a winning trade that I post? Absolutely not, everybody. But the important thing is that we're making more money than we're losing, or we're getting more pips than we're winning, more pips than what we're losing. Okay, and that is the important aspect of trading, controlling our risk, and then when the trades go for us, then taking advantage of that. So thank you very much. I hope you enjoy the analysis. I hope it works out for you, and all the very best for the week ahead. Thank you.